Right, everybody, thanks a lot for joining me as at this Tuesday afternoon market recap. Quite a momentous day across the board collectively for the US markets. I'll begin with the S&P 500. The reason for that is because today, as at the close, we have now printed a fresh new all-time closing high. Very exciting times on the S&P 500, also on the industrial average and the Qs. But as you can see on my screen, this is what we call a long day Morobozu candlestick. We closed up just over 25 points. And we've also blown above our ultimate target on the S&P 500, sitting here at 2,926. Again, time will tell whether or not this market is going to continue. I mean, definitively above these all-time highs. But as it stands and as at the close on Tuesday, big congratulations to those who have participated in this intermediate advance off from the primary bullish macro trend. Again, think about the change in sentiment which has occurred from Q4 into that of Q1. I mean, it's really been a tale of two tapes. Down the bottom here, there was a lot of sort of pessimism, a lot of doom and gloom. Again, a lot of people calling for the correction of the markets into that of a bigger and broader sort of trend reversal into that of a bear market. However, we have held true. We have remained bullish in the face of that sentiment. And as such, again, a lot of people are being paid off as this market continues to gallop to the upside. A very impressive day on the S&P 500. My concerns, I will say, however, are still here. Do not think that just because the S&P 500 pushed up another 25 points and we have closed at a fresh new all-time high, does that mean that I am once again jumping in on board with the trend continuation? Yes, I still have, of course, positions open, and I would say the majority of people in Pivot Point Pro, again, still have exposure on the upside of this market. The biggest problem, however, at this particular point is that when you think about in percentage terms just how far we have moved off from that late December low up to where we currently find ourselves closing as at today's price, it has been a move of over 20%. And generally what happens is, although the ADX has returned, okay, positive again, it is starting to slope back on up, or at least it's trying its very best to do so. When you start to see this ADX turn down up and around a very important resistance area, yes, I understand the terminology itself, or at least the application. A lot of people could say, well, that resistance is now new support. Well, not technically at the moment. We don't have enough price action up here. But generally what I'm trying to say is that we should endure that of a correction at some particular point in the near future horizon, so to speak. And again, although we are still macro bullish and nothing is changing that. I mean, if you pay attention to the exponential moving averages, these markets are still working very well. We've got the oscillators, which are still technically very much so overbought. This market still remains healthy and the trend itself still remains intact. Okay, very important to understand that. So again, although we have been culling positions most recently at 2,865, and again today, if you had your target set at 2,926, first of all, congratulate yourself. I am sitting here congratulating you personally right now, saying what a fantastic trade that you have been in over the past number of months. But at the same time, we are still entering into a period whereby risk is generally being taken off the table. Expect volatility at some point to surge up and around these all-time highs. Again, the S&P 500 leading the market, so to speak, to the upside. The Dow Jones Industrial Average today hit our target at 26,664. We almost closed on it, more or less to the penny. Pretty exciting developments here on the Dow Jones Industrial Average as well. However, what we haven't achieved at the moment is that of a closing all-time high. That is coming, all right? Just like it has done on the S&P 500, we are expecting a new all-time high closing price, maybe within this week. We'll see what happens up and around this resistance point, but we have, again, definitively hit our target on the Dow Jones Industrial Average to the upside. So again, I sit here and I wanted to take the time to congratulate you. We've got the NASDAQ as well, which is broken out to a fresh new all-time high. So we've got the NASDAQ and the S&P 500 more or less moving in synchronization together or with one another, whereby the Dow Jones Industrial Average, it is continuing to lag a little bit. It will catch up, but again, these markets are still on an absolute rip. We closed up 105 points on the NASDAQ, a big move to the upside, helped by Twitter earnings, not to mention some of the stocks in our top 12 list, which is what I am going to cover in the next maybe 5 or so minutes of this video. We are moving into earnings week. It is a very busy week for us in our top 12 individual trade list, but I just wanted to get that market analysis out there to congratulate those who have remained true to the market itself, who have held through some of the harder times or even through some of these corrections most recently, but have understood the primary trend direction of these markets and understand again the fundamental backdrop and essentially just how much gas is still left in the tank for the equity markets to continue their climb further into 2019. That is where it becomes most exciting. Also, if I zoom out, if this is going to be that of a true breakout where we currently find ourselves as at Tuesday afternoon, the whole dynamic is about to flip. And I've been speaking about this on this YouTube channel for a number of months. You have to consider this sort of channel consolidation, whether or not you want to call it a channel consolidation. I've just sort of drawn a circle initially just to highlight the price action that I'm talking about. But if you were to call this resistance at the top and then again support down at the bottom, this is a pressure cooker. And essentially what's been happening is that although a lot of people have been calling this sort of distribution, which, you know, at some point in time during this move, it certainly was relatively valid, so to speak. But this is now definitively turning into that of consolidation, more in particular, more that of an accumulation period. And what that means is all of the shorts who have been sort of aggressively taking on positions up and around these resistance areas or as close to the tops as what they possibly can, they're going to be asked a question, or at least they're going to have to answer a question for themselves at some particular point, at some future date. And that is going to be, am I going to hold this losing trade? That, of course, being if you're holding shorts up and around this area and the market continues to move higher, obviously that is going to result in a losing position. So are they going to? I mean, it's not a matter of are they, it's when. The question becomes when. When are they going to sell to close, which is going to add fuel to the fire of what already is that of a predominantly bullish market, right? A buyer's market. The buyers have the upper hand, and this is simply just aiding in prices actually moving further and higher into the future as well. So think about that, and hopefully if you're listening to this video, you're not actually short in the markets. We've been speaking about that. We've raised concerns, but we aren't trading counter trend on any pullback that we get, and allowing these oscillators to actually reset when and if they choose to do so, mixed with the ADXs across the board. Again, on the NASDAQ, it is getting up very close to 50 at the moment. It can linger up here for a little bit more. But again, you have to expect when we do ultimately see this type of move, I've mapped it out in Pro, that one of the two sort of directional portals that this market is going to take, or these markets are going to take, you have to be prepared to buy it. Because again, you want to accumulate a large position on the actual indices themselves, right, as sort of a foundation sort of position, so that you have exposure to this market moving to the upside. And that is going to, again, continue to bring you in the money week after week on a whole as the markets continue on their merry way. So again, for those of you who are looking at this market with a bearish tone, I would seriously ask you to reconsider that perspective. The market is giving you all types of clues that it's going to continue further. Even if we do see that of a correction on the near horizon, it's only going to be a temporary correction back into some of those rising, either exponential or simple moving averages. And as such, you don't want to put yourself in a world of hurt holding a bunch of short positions or net sort of short exposure on the actual market indices at this particular point. There's a fair chance that this is not only going to continue for the entirety of 2019, but also for a large portion of 2000 or into 2020 as well. So I just wanted to make that very clear. But very exciting times. NASDAQ breaks to fresh new all-time highs. The S&P 500 closes at new all-time highs. The Dow Jones Industrial Average is only really a couple hundred points away, not even, from this little doji candlestick, which set off the Q4 retracement beginning October 2018. So these markets have recovered. They've recovered resiliently and very quickly. And as such, this pressure cooker is still bubbling, even though we're starting to see that dynamic shift between that of the buyers and sellers. The buyers have control, and it's a matter of jumping on board with it, or at least holding those original positions, okay, to the upside as this market continues. Now, I just wanted to recap a couple of individual stocks. Obviously, we have got a lot of stocks reporting this week. If not this week, it is the following week. Apple is a good example of that. It's really scheduled for the final trading session in the month of April. However, we have been long Apple on these past three entries, 178, 188, and most recently 198. Over the weekend, we spoke about closing this trade out on any pop to the upside. That was really the narrative. And the reason for that is because we have this earnings data. We need to close out those option contracts prior to earnings. So not only have you been blessed with Monday's price action, you have also been blessed, obviously, today with Tuesday's price action as these markets have taken out their all-time highs. So you should be thinking about actually selling this position, selling to close the position, certainly by the end of this week, and locking in these profits. There's no reason holding on to that trade for really any longer. It's already rewarded you this week, and it's a very good time, an opportunistic time to actually cull that original position. Again, on Amazon, 1,787, 1,835. Most recently, we were looking at this to the upside. Sorry, not most recently, but to begin or to initiate the trade, it was 1,681. These are all long entries on Amazon. Here we are, Monday's price action, it pops. Tuesday again, we close up just over $35. you should be out of this stock for a very handsome profit. It's really that simple. You should be out of Amazon for a very tidy profit. Get out of Boeing Airlines as well if you haven't already done so. I'm assuming we made this very, very clear over the weekend. You should be pretty much, or if not, out of this position as at the close today. If you are not, all right, you may have some issues tomorrow, but it may be also a good learning opportunity as to why you closed that trade out. Baidu getting a little bit of a bid today, up just under $4. Caterpillar, you should have closed this trade out again today as well. That's why we've got this dashed line. Whenever you see a dashed line on my screen, it means that personally I'm not taking the trade, and the reason for that was because of this vertical line on my screen. It means that it's an earning state and we need to close that original trade out. COP, if my chart wants to wake up, it's more or less still moving sideways. We've got CVX doing nothing as well. Disney is still holding up around these most recent highs, which is positive, I should say. But at the same time, we're drawing closer again to the vertical line. So I really wouldn't be doing all that much with Disney at this particular point. Google is catching the bid like Apple and, pardon me, also Amazon up another $16.83. It hit our target. Obviously at 1,267, you should be out of Google completely. All right, remember down during this period where I was talking about all of these stocks coming back to retest and take out their all-time highs, and I was saying, well, you could consider me a little bit crazy. Look at the dynamic, look at the picture, look how much it shifted, and now this is a slingshot back on up to these all-time highs across the board for a bunch of these tech companies. Here's Amazon again. It's already retraced over 50%. It's probably getting closer to about 80% of the Q4 retracement. So again, these stocks are clawing back their losses, or the Q4 losses, and we've been riding these stocks higher based on our narrative, our analysis, our forecast of the actual market indices and what they are going to do. So again, you set the tone on the markets, the actual indices themselves, and then of course, when you learn how to read the technical chart, you can set the trades up to take advantage of that directional movement. Now, again, IBM is holding up pretty well. I mean, it hasn't closed the gap, but at the same time, it's not tanking. There's not enough information or time at the moment. There's not enough structure to actually close or at least open up a new trade on IBM. And interestingly enough, today after Netflix's earnings, which occurred last week, we're seeing a slingshot again to the upside. Personally, I think Netflix is going to be one of the biggest shorts, one of the most profitable shorts in maybe a year or two's time. When we see the big macro trend of the market shift, I think Netflix is going to be very firmly, so to speak, in the crosshairs, and that's going to provide us with tremendous opportunity. However, again, this is just participating in the markets themselves, clawing back and moving above their all-time highs. It is lagging a little bit, so are those big tech companies, as I've already sort of moved over with you. But again, this market, above all else, you have to accept the fact that it's moving higher. Don't let your ego get in the way of the directional movements of your trades. Otherwise, you'll be caught in a world of hurt. Accept the fact that the markets are moving higher. Accept the fact that they still have at least a year to run. And as such, position yourself whereby, again, if you've got the Qs or if you've got the diamonds or if you have the SPYs, or even if you wanted to trade leveraged ETFs, right, and just pay a holding cost, at least you're going to get paid off as these markets continue to trend. And the exciting thing is, and a lot of people are again discounting this very simple fact, is that really for the past, I mean, you could more or less say 1.5 years, the market has been trendless. So again, this essentially goes back into the understanding that this is going to be retrospectively a period of accumulation, whereby once we break above the top, we're actually going to experience the first trend, a legitimate trend higher, which essentially ended in the period of December 2017 prior to the first sell-off of 2018. So this is a very exciting period for those who are tracking it, those who understand price action, chart patterns, all of these things, where we sit in the late sort of business cycle at the moment. And if you think that you've been rewarded on this little move here, or what is deemed to be a rather large move, which yes, it's over 20%, I agree, it has been tremendously profitable. You haven't seen anything yet. Once these markets definitively move above, we might see a little bit of a back test and then a continuation. But once we get that confirmation and then the continuation higher, boy, oh boy, it's really going to be, I think, a profitable 2019. And I've already said, I think a lot of analysts are really underestimating just how much gas is left in this market, and also the past 1.5 years price action, which is all pushing us towards this moment, which is going to be very, very profitable for those who've got long positions in the market. All right, ultimately, we're going to close them out prior to the market peak, but this is not the market peak. We are nowhere near the market peak. If you want any more information about market structure, market information, market trading, individual stock trading, jump into that weekend pro analysis class, sign up today, and you can go back. There is a backlog, so to speak. I mean, it must be at least 4 months long, maybe even longer, of past videos mapping all of this analysis as the markets have continued to unfold. And again, educate yourself, because there is a lot of profit to be made in this market, at least for the entirety of 2019. On that note, everybody, I'm going to say farewell with you, to you. I will recap some of the earnings later in the week. Stay safe, everybody, and I'll be back in due course. All the best. Farewell.